Okay, so let's talk about something pretty much all of us have and all of us pay for: insurance. But do we really truly know how it works? Today, we are pulling back the curtain. We're going to look past all those comforting ads and promises of protection, and we're going to ask, what is the hidden truth behind your policy?
I mean, we buy it to protect ourselves, right? Health, car, home, it's always sold to us as this financial shield, a safety net that's supposed to be there for us when things go wrong. It's supposed to be about peace of mind.
And that's a comforting thought, for sure. But here's a question for you. What if that shield isn't just designed to protect you? What if its main job, its number one priority, is to protect someone else's bottom line? Let's dig in and find out what the business of insurance is really all about.
To really get a handle on your policy, you first have to understand the business model. And it's simple, really. While they market themselves as our protectors, insurance companies are, first and foremost, businesses designed to make a profit. And trust me, that one fact changes everything.
So here it is, the most crucial point. The simplest way an insurance company makes money is by collecting more than they pay out. It's a concept called underwriting profit. Basically, it's the pile of money left over from your premiums after all the claims are paid. The bigger that pile is, the better they're doing. In fact, they have a key metric for this: the combined ratio. If they can pay out less than $1 in claims and expenses for every single dollar they take in from you, they're winning.
Now this is where it gets really interesting. Let's look at where your premium dollar actually goes. You can see a big chunk of it is set aside to pay for claims, which makes sense. But that's not the whole story, not by a long shot. See that other huge slice? That money is immediately put to work as investments. So your premiums aren't just sitting in some vault. No, they're out there in the market, generating a whole second stream of income for the company.
So you might be wondering, how does this profit-first mindset show up in my actual policy? Well, it's all in the fine print. You know that massive document you probably scrolled right through and clicked "I agree" on? That's exactly where this business model is put into practice, word by painful word.
And hey, if you've ever felt completely lost trying to read one of those policies, you are definitely not alone. The language can feel, well, deliberately complicated. This quote here really says it all. These documents are often not designed to be easily understood. So what kind of traps are we talking about here? Well, first, you've got exclusions. You think your home insurance covers floods or earthquakes? You better check that again. It almost certainly doesn't unless you bought a special, separate policy. Then there are waiting periods, which means you could be paying for months before you can even make a claim. It's all buried right there in the text, just waiting to catch you off guard when you need that help the most.
Okay, so let's imagine the worst happens and you actually have to file a claim. You probably think you're calling for help, but from the company's point of view, you're not calling for help. You're kicking off a strategic game designed to protect their money.
And this right here, this is probably the single most important thing to remember when you make that call. The person handling your claim, the adjuster, is not some neutral referee. Their job, what they are literally trained and often paid to do, is to find every legitimate reason within your policy to pay you as little as they legally can. In this slide, it lays out their playbook perfectly. First, they might just delay, hoping you'll get worn out and just give up. Then comes the mountain of paperwork, where they hope you'll miss a document or check the wrong box, because one tiny mistake can be grounds for denial. And finally, if all else fails, they might just offer you a quick, lowball settlement, betting that you're just so tired of fighting you'll take whatever you can get.
Now, as if that old school playbook wasn't enough, technology and data have added a whole new layer to this. Those old strategies of delay and deny are now supercharged with powerful algorithms and these tempting deals that might not be nearly as good as they look. You've all seen the commercials promising unbelievably low rates. Well, welcome to the teaser rate trap. It looks great up front, right? A super low price.
but it often comes with major restrictions and pretty weak coverage. And then, once that intro period is over, your rate can suddenly skyrocket, and the company is banking on the fact that you won't bother with the hassle of switching.
So how do they even come up with these prices? You probably think it's all about your driving record or maybe some basic health history. But what else are they looking at? I think the answer is going to surprise you.
Oh yeah, they're looking at way more than just your claims history. They're looking at your credit score. They're analyzing your shopping habits, and believe it or not, in some cases, even your public social media posts can be used to build a risk profile of you. They're making judgments about your lifestyle, even the neighborhood you live in, all to decide how much to charge you. It raises some pretty serious questions about fairness and privacy, doesn't it?
Okay, so that's the reality of the business. And I get it, it can feel a little bit daunting. But here's the thing, knowledge is power. So let's flip the script. How can you navigate this system and protect your financial interests?
All right, here's your action plan. Number 1, you have to read the fine print. I know, it's the most boring thing you'll do all year, but it could save you thousands. Focus on the exclusion section. Know what isn't covered before you need it. 2, if you have to file a claim, document everything. Every call, every email, every photo. Create a paper trail. It's your evidence. 3, don't just accept rate hikes. Call them up and ask why it's going up. A lot of times, they're just banking on you not paying attention. And finally, 4, think about talking to an independent agent. They work for you, not for one company, and they can shop around to find the best policy for your actual needs.
Look, the insurance industry is built on a model where their profit can be in direct conflict with your payout. That's just a fact. But by understanding their playbook, by being vigilant, and by being prepared, you can start to shift that balance of power. So the question is no longer just about who the system is designed to protect, it's about who is prepared enough to hold the power.